Welcome back to Investing 4.0, Visionary Investing and Future Trends. Today with a slightly different setup. So my blackboard is on the left and I'm sitting here right where I edit my videos. Today we'll have a quick look at the reasons why I'm investing into Chinese stocks. This month, actually, I extended my positions in Alibaba, Tencent, Neo, Huya, and JD.com, and I currently have BYD, Baidu, and Xiaomi on my watch list. I have a personal interest in Chinese companies as I studied Chinese and business administration myself and spent almost 1.5 years in China. So this is a little like a kickoff for a China series. Most investors structurally underweight China because of historical access issues, political reasons, and general skepticism. Most people also don't understand China as a market and therefore are hesitant to invest their money. Just yesterday, I had a discussion with someone under another YouTube channel that is actually in German, and the video was about Chinese ETFs. I'm going to show you a screenshot here that is in German, but I'm going to translate it for you right now. So it says that surely they have nothing against economic success, but who knows how foreign money is handled in such a country without constitutional structures. Obviously, this criticism is right, but frankly, everybody has to decide for him or herself if he or she feels comfortable with the investment decision. But investment always means to take a certain risk. So first of all, I want to give you my reasons why I believe that investing in Chinese stocks or companies is a smart decision right now. Now here's a quote that I got for you. I think it is universally acknowledged that China will become the biggest economy in the world and not if it will become the biggest economy in the world. That is what Luke Oliver, head of the index investing of the Americas at DWS Group, told at an interview at CNBC. Now, the first argument that, in my opinion, counts is the political situation. China is a country with one political party in power, and if the Chinese Communist Party makes a plan, they execute it, which actually allows them to move at a higher speed than any democratic country. Of course, this comes at a cost, for example, like civil or human rights, but we're not going to discuss ethics today. And the Chinese party always sets up a 5-year plan and really puts out the targets for the next 5 years and executes them. It's actually very similar to what we can see what Elon Musk is doing with Tesla and all of his other companies. He has a clear vision and sets like goals, like 5-year goals, for example, and really focuses on achieving them and even beating his own targets. So having a clear plan and focus areas always makes you faster and gives you better decisions for the future. So the advantage is that other democratic countries are still in the discussion and arguing and not really getting any further with their decisions, and China can just execute. Again, there's the plus and the minus obviously on this side, but for the economy and for the investors, this is actually a pretty good argument. Now, argument number 2 is that China is an economic superpower with a population of more than 1.3 billion people, which actually is still fairly low per capita income, which allows massive growth opportunities if the overall wealth increases. Now, another point that is actually happening right now is the trade war between the US and China. In my opinion, this actually helps us as investors, but also the Chinese government. For investors, it means that a lot of Chinese companies have been under high pressure, which obviously had an impact on the share price. Now, this combined with the Corona pandemic made a lot of Chinese stocks comparably cheap to buy. Now, you might ask yourself, why is this actually helping the Chinese government? And I remember a very intense discussion that we had with our professor during my studies. In 2009, China became the world champion in export. So exporting most goods of any country in the world and kicked Germany off the throne. Obviously, I didn't like it back then and I still don't like it. But we discussed if that's actually a good thing for China and came to the conclusion that China needs to increase the domestic economy in order to allow a stable growth and to be more independent. Now, the trade war actually helped China to accomplish this, and here's a good article from, I think it was New York Times, that explained it. So China has shifted to being a more self-reliant economy. Over 50% of the GDP comes from consumption within China now, and it becomes less reliant on the rest of the world. And actually, I think that it makes it more interesting long-term because of the correlations that could remain very low for China, and you still got these higher growth rates to be expected. So what are actually the best ways to invest into Chinese companies? As always, this is no investing advice, it's just for your entertainment and information. To benefit from the overall China market, you have basically 2 or 3 options. You might consider ETFs like the MSCI China. If you have an emerging markets ETF, however, check out the weighting of the countries. Usually they have a heavy weighting of China with around 40%. If you compare these 2 options, the MSCI China ETF and an emerging market ETF over the last 10 years, the MSCI China would have performed better than the emerging markets ETF with 6.8% per year compared to 2.9%. However, if we look at the numbers going back to 1992, the numbers switch. So with the emerging markets ETF performing with 7.2% and the MSCI China only with 2.3%. So what does it mean now? We actually don't know, so you gotta make your decision what to do. Of course, nobody knows how the future will look like, but I thought it was interesting to compare those two. As you might know, I am running 2 strategies, one being a long-term ETF strategy, and that portfolio is consisting of 7 ETFs that reflect the world as with a specific weighting that I defined. And the other strategy is my single stock investment strategy that is focusing on trends. And currently, I am personally invested in an emerging market ETF, but I'm also investing into single stocks of Chinese companies and therefore chose to overweight them in my portfolio. Now, I'm interested if you have any Chinese stocks or ETFs in your portfolio and if you are planning to buy more of these short term. In the next videos, I will analyze the tech companies I mentioned at the beginning of this video, and that's the stocks that I bought, and probably also give you an update about Baidu as well. I didn't buy them yet, but we'll see what's happening. And I really think that these companies will highly benefit from China's new 5-year plan that will be laid out this month, as China really aims for or shooting for becoming the digital leader in the world. So those were my reasons for investing into Chinese stocks. I hope you enjoyed it and will leave a like. If you don't want to miss any of my future videos, please subscribe to my channel. I finally got the go from my employer, so I can now focus on creating a few more videos throughout the week, because what I did so far was kind of in the gray zone and I was a little bit hesitant. So until then, stay healthy, stay tuned. I'm out.